Hi, so when it comes to credit scores, there are 5 factors that affect your credit score. These factors are not all equal, which are what the percentages are. So the most important factor, which has a weight of 35% when it comes to your credit score, is your payment history. Are you paying your credit accounts on time? Your payment history stays on your credit report for 7 years. So that's why it's very important, even if you're just making the minimum payment, to make your payments on time if at all possible. The next most important factor is the amount of debt. That has a weight of 30% towards your credit score. So this would be how much debt do you currently have compared to how much debt you had when you opened the account. So this is really important when it comes to credit card accounts, because what the credit bureaus like to see and what really helps your score is to show that you have credit available to you that you're not using. So what we suggest to people is to use 20% of their available credit. So that means if you have a credit card with a credit limit of $1,000, you want to try to use $200 or less of your credit. Try not to ever let your balance go above $200, and that will really help your score out. The next most important thing is the length of your credit history. So how long have you had credit accounts? If you're just starting out building your score, this obviously isn't something that you can control. But this is why we do suggest if you have an old credit account, even if you're not using it, don't close it. Just leave it open, because that will positively impact your credit history, the length of your credit history. The last 2 factors, which have the least amount of importance, are the amount of new credit that you have, which is how many accounts have you opened recently. If you've opened a whole bunch of accounts recently, that may have somewhat of a negative impact on your score, but again, it's only 10%. And then what is your mix of credit? So do you have a good mix of what we would consider installment loans, which would be like a bank loan and a car loan, and combine that with revolving loans, which would be like a credit card. So stay tuned to our page for more tips on how to get a good credit score. If you have any questions, feel free to let us know. Thanks so much.